If you've been in crypto for more than 5 minutes, you've heard people say liquidity is everything. Well, it is important. And one thing that can help us get a better understanding of what the market may be preparing for is stablecoin volume sitting on exchanges, as they can be an indicator of what the market has sidelined. They're what traders, funds, and regular users actually use to buy crypto assets or quickly exit out to a dollar-locked value. When stablecoin balances on exchanges build, it's usually a sign capital is getting into position. So, when you see signals of stablecoin reserves being reported, it's a good measure of where the market could be headed and where capital is ready to be allocated when it moves. Recent reports have looked at the amount of stablecoins sitting on global crypto exchanges ready to be deployed by investors, and the numbers tell a very clear story. If we look at USDT and USDC reserves on centralized exchanges, Binance remains the primary venue for stablecoin liquidity. Today, Binance houses $47.5 billion in combined USDT and USDC. A year ago, that figure was $35.9 billion, which means balances on Binance are up about 31% year on year. And the gap to the next tier is not subtle. OKX holds around $9.5 billion, Coinbase around $5.9 billion, and Bybit holds around $4 billion. So you've got one venue holding nearly $50 billion in the major stablecoins, and then a steep drop-off. Now, you may be thinking, okay, so Binance is big, but does that actually matter? And the answer in terms of security, trust, and liquidity is a resounding yes. Yes, it does matter. Why? Because stablecoins on exchanges can quickly translate into liquidity when it's most needed, which in turn means execution quality, deeper order books, better fills, less slippage, especially when things move fast. And those of us who have been in crypto a while are all too aware the market can change direction rapidly. It also matters because stablecoins are the easiest proxy we have for deployable buying power sitting close to the market. At the time of recording this video, about 65% of total USDT and USDC balances across all global centralized crypto exchanges are held on Binance. That's about 2/3 of total stablecoin circulation, and it's a barometer of the trust our 300 million users place in Binance. So let's look at other crypto exchanges. OKX holds roughly 13%, Coinbase around 8%, and Bybit around 6%, with others trailing after that. What does that mean? Less liquidity, and that's important. If we look at the historical timing of when stablecoins moved, this is where the data gets interesting and actually helps you interpret the market. Stablecoin reserves across exchanges grew strongly right before the late 2025 price decline. In the 30 days up to November 5, exchange stablecoin reserves increased by about $11.4 billion. Then, as prices corrected and the bear phase began to bite, those reserves fell by about $8.4 billion by December 23. Stablecoins build on exchanges as capital gets ready. That's when the market turns, people reduce exposure or reposition away from risk. But the important update is what happened after that sharper outflow. The pace of reserves leaving exchanges has moderated. Over the last month, reserves are down by only about $2 billion. That doesn't mean bull market confirmed, and it doesn't mean the bottom is in. It simply means the speed of the drain slowed. In normal human language, the panic spirit eased into a walk. Stablecoins on exchanges aren't just a number. They are a sentiment and positioning barometer. When they accumulate, it can reflect readiness in terms of dry power, capital ready to invest. And when they drain quickly, it can reflect capital retreating. And because Binance holds such a large share of major stablecoins, it's often one of the cleanest ways to watch for those shifts and a primary venue to deploy capital because liquidity compounds. So, zooming out, stablecoins on exchanges can be seen as another proxy for deployable liquidity. We saw reserves build into early November, drain sharply into late December as risk flipped, and then those outflows slow materially over the last month. Less panic, more stabilization. And across every one of those moves, one thing is clearly suggested in recent data. that Binance remains the most trusted exchange for safeguarding, positioning, and deploying stablecoin capital. Let us know what you think in the comments, and we'll see you in the next one.